Chairman. Good morning. Friends of Hong Kong, I think we are all here as a family, and I'm so pleased that I met so many new friends today, but also catching up with so many old friends, including my old friend David Matheson, QC. And Barry, I remember very well that in the 80s, we met through our late mutual friend Bill Lam, and it has been a wonderful association with both PwC and the Canadian Chamber. Ladies and gentlemen, I'm extremely grateful to the Federation and for TDC for organizing this very special forum. I'm particularly happy and grateful that I can this morning share the platform with Ms. Pansy Ho, whom I have known and admired for many years than both she and I care to recall. And I'm very, very pleased to hear her presentation, and her company is going from strengths to strengths, and is all credit due, deservedly, to Pansy and her colleagues. Ladies and gentlemen, the macro competitive factors of Hong Kong are well known to you as a wider family of Hong Kong, and Pansy in her presentation has highlighted some of the most important positive factors that we have as a hub. So I will not repeat some of these factors again. I would like to share with you this morning the experience of a small local Hong Kong family business that have been able to take advantage of all these macro positive factors and the rapid rise of China in the last 30 years to become international investment institution with almost global presence today. I will talk a little bit about it in a few minutes, but always with a focus on China and China-related theme and strategy. Our hope and our ambition has always been playing a small part in connecting China to the world and the world to China. I returned to Hong Kong in 1982, having been trained as a solicitor in the City of London, and I practiced corporate finance and M&A transactions and China-related transactions at the very early stage of China's open door policy. That's when I had the privilege of meeting these well-known international lawyers from Canada, David and his partners, and also many others who are here, who we had the privilege of working as professional colleagues. In 1986, unfortunately, my late father became very ill, and I had to take over the chairmanship of our family securities firm. I'm very pleased to say that next year we will be celebrating our 50th anniversary in Hong Kong. By Hong Kong standards, we are one of the 10 oldest securities firms locally. But what I found, to my surprise, was that my father's business was essentially a private client's business, and yet I, being a corporate finance lawyer, my skills is on the corporate side. So there was a slight disconnect of what our business is doing and what I'm supposed to be good at. So I quickly tried to add a division to our family business that is more complementary to my own skills. First, I invited the Guangdong government to become a minority shareholder of our company, and that was the first PRC financial institutions to take a share in a Hong Kong securities firm. Today, it looks quite common, but in 1986, that was quite revolutionary. And over the years, we have trained hundreds of professionals who come through our firm here from Guangdong on a one-year training program, and thereby helping China to develop its initial pool of corporate finance and stock market expertise. In 1988, we founded a new company called First Eastern, that is the the brand that we have used ever since, to invest directly into China. And we had partners in Mitsubishi Trust and Marubeni of Japan. Our family had 65% and our Japanese partner had 35%. But unfortunately for us, a few months after we started, it came Tiananmen Square. And it was difficult at the time when Japan was imposing sanctions on China, like many parts of the world, to have Japanese partners in our consortium. So we immediately had to renegotiate to buy back our shares from our Japanese partner, which we did in 1990. And in 1990, we opened in Beijing, Nanjing, and Shanghai. We created the first joint venture investment advisory firm in China and the first joint venture capital investment firm in China. This is in the early 90s. And after 2 years of investing our own capital, we got some experience, mostly painful, but you learn very quickly. And that's after having practiced for quite a number of years as a China legal specialist. My first investments in China, with the support of the top leaders at the time, was a complete write-off. So I learned very quickly from then. And in China, you have to really move with the times because the market changed so rapidly. But we created a team, and we do have developed a good network. One has to remember that after Tiananmen Square, China was really virgin territory in terms of international investment. So in 1992, we created a fund, the first private equity fund focusing in China. And from then, we never looked back. And over the last years, we have invested in over 120 companies in 40 cities in 12 provinces. And we have been instrumental in generating over $10 billion in direct investments in the PRC. So that really was the foundation that we have laid, not knowing how the future will unfold, but being Hong Kong Chinese, we feel rightly or wrongly, we should be the natural gateway and a natural connector between China and international capital. Several things then happened. In the early 90s, my family securities firm became one of the first international securities firm approved by the Bank of China, by the People's Bank of China, China's central bank, to be one of the 14 authorized underwriters of B shares. In 1991, when I served on the council of the Hong Kong Stock Exchange, I had the privilege of initiating a program to encourage Chinese companies to use the Hong Kong stock market to raise international capital at a time where China does not have securities law or company law. And that paved the way to what is today known as the H-share program. And then we have even become bolder. We decide to go to the Gulf. And I've been going to the Gulf for 20-odd years, but 12 years ago, we opened our first office in Bahrain, and 4 or 5 years ago, we were the first Chinese financial institution to receive investment banking license at the DIFC in Dubai. And we try to connect China not just regionally, but also in the Middle East and through the Gulf into, hopefully, North Africa. That strategy has yet to proven. It's only working slowly, and that's also one of our main challenges. And then another first that we were able to do is that we have been the first Hong Kong company that had the courage to launch a takeover bid on a bank in Britain. You might have heard of Northern Rock. We were part of the Richard Branson consortium to try to take over Northern Rock. We were the last preferred bidder, but at the end of the day, the UK government decided to nationalize Northern Rock, and the rest of history. But having failed to take over Northern Rock, we did not go away. The following year, we went back to the UK, and we, First Eastern, became the first Hong Kong company to take over a London FSA-regulated merchant bank with offices in London, Hong Kong, Beijing, and Shanghai, and which we have become now fully integrated with our merchant banking operation. And last August, we were again very fortunate in being the first international investment firm, private equity investment firm, that received the license from Shanghai to enable us, the local license in Shanghai. And this year, in September, we received a local license from Beijing to enable us to raise and manage RMB-denominated funds for private equity investment purposes. And this is something that we are very fortunate to be on the cutting edge of innovation. And on September 9th this year, we, in conjunction with ANA, All Nippon Airlines of Japan, have announced the launching of the first low-cost carrier in Japan. And we are the first foreign company, not just a Hong Kong company, to be able to take 33% ownership in a Japanese domestic airline. And that is the maximum foreign ownership allowed for the moment. So, and Barry very kindly mentioned the UK-China Fund that we launched last month on the occasion of the visit of the new British Prime Minister, Mr. David Cameron. Our DNA is such that we only do buy-ins as opposed to buy-out. We are very comfortable to be minority partners. We're not paranoid about control. Our mission is to add value to help our major partner to succeed, whatever methodology or route that may take. It may be introducing just capital, but more likely than not, it will include enhanced financial and management input, international technology distribution, and bring in the right professional expertise, or help them to raise capital regionally and internationally. That we've been doing for more than 20 years, investing in Chinese companies, helping them to go abroad. But as the global market now changes, Chinese companies are beginning to go global. More and more international companies come into the thriving China market because Europe and the American markets in the foreseeable future will still be stagnant in its gradual recovery. China is the shining light in the world as a new emerging market. But as a mid-sized company, it's very difficult to succeed in a market like China, as we have found out ourselves. So now we are turning the table. We're beginning to invest in medium-sized companies in Europe, in America, and in Asia, and together we'll help them to crack the new China market, particularly for the rising middle-class consumers. So, ladies and gentlemen, I think being based in Hong Kong and being Hong Kong regulated institution, you don't realize how fortunate and how privileged that is until you go abroad. When we were trying to take over Northern Rock, we have to go through FSA clearance. We stand naked in front of FSA. Although Northern Rock, we do not succeed. But when we acquired Evolution Securities Asia, we got permission from FSA within 10 days. I mean, that's amazing. I mean, even in an efficient market like Hong Kong, it would take probably more than 10 days. But we were able to do that. And we today are one of the few international institutions that are pre-approved if we would wish to take over a UK bank. Not that we would want to at any stage for the time being. But the reason is that we are Hong Kong, because the Hong Kong regulatory agency is considered to be Rolls-Royce by other international agencies. And that adds a lot of comfort. Now, being Hong Kong, again, going into politically sensitive areas, and for example, in Japan, airline business is the core of its domestic infrastructure. And if we were a Chinese company from the mainland, it would have to go through, I think, probably more scrutiny for all the right reasons. But being a Hong Kong company, again, I think our colleagues in Japan feel very comfortable because they know Hong Kong, they know that we are transparent, and we are regulated in the same benchmark standards that they're used to. But we also have to adapt to change and always have to be innovative and, if possible, at the cutting edge of that innovation. And that is Hong Kong's own DNA. Hong Kong has no natural resources but our people, but our willingness to change, to adopt to change, to be culturally diversified. Now, that DNA for Hong Kong people, Hong Kong companies, are extremely competitive in today's changing world. And finally, as China continues to hum away, and in the relative chaotic global markets, China is still, despite all the challenges of inflation or the possibility of some asset bubble, China is still a pillar of stability in this region and probably in the global market. As China continues to rise in the 21st century, Hong Kong being the best and the most natural gateway to China, I believe that Hong Kong's finest hour is yet to come. Thank you very much.